If you Googled, how much do I need to set up an SMSF? Most places would say between $200,000 and $250,000. The most common question I get when someone's exploring self-managed super is actually, when does it make sense? Now, the answer to that is never simple because it depends on what your current super is doing and what the performance is like there. But also, I'd say this is probably the most relevant question is, what do you want to invest in? So what sort of assets do you want to use your super for? If you're going to close an industry super fund, set up an SMSF to invest in a term deposit, you'd be nuts because the fees would I'd say you'd need a couple of $1 million before the fees of a self-managed super fund would outweigh the benefits of just leaving it in a even in a cash fund in a industry one. But even if you've got a small balance, I've seen some people with a balance of maybe under 100 grand or around 100 grand set up a self-managed fund to hedge other investments they've got outside of super. So that could even be, people sometimes hedge with gold or silver bars, assets outside of super like shares or property where they want, a metal, like a valuable metal to offset or hedge some weird things might happen with the property market or the share market. I've also seen people with smaller balances set it up to invest through businesses or angel invest or lend money, some of the topics we'll talk about today. So there's some examples where it doesn't always make sense or there's a dollar figure that makes sense for everyone. But there is a ballpark. There's a ballpark that if you Googled, how much do I need to set up an SMSF? Most places would say between $200,000 and $250,000 in super as a break even on a costs perspective. So a cost of leaving it in an industry super fund versus setting up a self-managed fund. Now keep in mind that 200 to 250K is the combined balance of the number of members you've got in your fund. So if it's just you, then that's your balance. But if it's you and your partner, then you need to look at what's your combined balance and do you kind of meet that rough guide to break even.